Okay, everybody, it's part two, and I'm still looking at this target weekly. Yeah, like I said, if you're short this stock, you see the money flow patterns here of on the weekly, declines. Uh, your the MACD has failed to rally above zero on this stochastic upturn, weak bounce. Then it sold off, got sent back to 45, then back up on the earnings hype, same store sales hype right here. I'm put the camera down there for a second. What I was saying is, as you can see here, when the stochastic turned up, it got to 52 on the earnings hype. Then it, well, no, that wasn't the earnings hype. That was probably recovery hype. Then it drifted back down to 45. Then it went back up on the earnings hype and same store sales hype, which has gotten sold into. Now I expect this probably to have a big red candle down next week and break that 45 area and head into the abyss, down into the $30 range. Eventually would be my target, if the market gets a little nasty here, which I think it may. This SPY too, if you see this 114 area get taken out, you pretty much know we are going to head to another new low. The SPY on the weekly, take a look at that. The SPY on the weekly, as you see, you got a stochastic that's still 23 and 21 reading. If it's typically stochastics that get pushed back down from these levels, that's when you have some pretty big moves. Stochastics on the weekly and the monthlies can stay embedded for periods of time. You do have the histogram shows that the momentum has slightly shifted up, so the bears need to crush that with a down week in the next week. So we're watching for the action next week. You're about to have a crossover of the 18 minus the 50 period here also. That's worthy of note. And even though you had the pumping going on early in the week, we did close the week negative by 12 cents on the SPY, or 0.1%. So I'm not going to go over the silver charts. Silver has been doing really well. I will go over Pan American Silver, which was one of my favorites, and I do believe that this is about to break out. You see here, you got the higher low on the MACD. I'm comparing August 8th to June 20th or so. Even though you put it in a lower price low, you had a much higher MACD, and the MACD looks like it's about to take out this previous high in the 34.26 range, and the stochastic, it looks like it's embedded to the upside, and basically you're about to have an 18 cross to 45. I think that this stock is going to break this. There's a resistance line right here around the 34.30 area. I believe it will take that out, and from that pattern it should run back to the old highs of $42 to $44 a share in the near term, and then eventually I think it'll go much higher than that, probably $60, $75 a share by the end of the year, or sometime over the winter. So I like this stock a lot. They've been, one thing about PAS, it was a $44 share stock back in 2008 when silver was only $18 an ounce. So now you have silver almost 2.5 times that, and the stock price is actually lower. So it has a lot of room to go on the upside. And these miners in general. Looking at the retail index here, retail is a large portion of the economy here. As you see, retail has not had the death cross yet, but we rallied right up to those two key moving averages, the 50 and the 200, and look at what happened. Sellers came out, and then the big red down bar on Friday, after selling on Thursday into the quote-unquote good same-store sales news, where the companies beat by 3% when real inflation is probably triple that. So that is not good news. If you're growing your sales by 3%, but the price of your goods are going up, say 10% to 15%, you are getting killed. and you're just a matter of time before your profits erode. So as you see here on the stochastic, what's going on here? All right, so you got the stochastic here is turning down 75 and 86 readings, so it's very very bearish, pointing down like that, and you got the histogram confirming. There's another indicator to look at too. It's called the ADX, and generally when you have a crossover on that, also you should also look for that for confirmation of a move before you take a position. As you see here, when this red line crosses the green, there you go. When this red line crosses the green, I'm looking at this bottom indicator here, to right over here. That red line crossed the green, confirming that this move is for real. And you got the histogram, ticking down like that, and you have the MACD is flattening. You get another down day, push down. You're going to have this MACD roll over, and then you'll have a cross, and this obviously could be the start of the next leg down, which would probably bring you into the 300s on the retail index. Probably I would say the target would be about 390 for the near term before any bounce. So that's a pretty big move, and it totally jives with the economy. There's no jobs being created, as what came out on the employment report, and you have a lot of negative things in the pipeline. I mean, if anything happens with Europe, this thing could get out of control, and we can wind up testing 666 on the S&P 500. And I think people are really underestimating how fast this can go down. I mean, you got to pull up some old charts on 2008 to just see how fast things can get out of control. Right now the VIX is only in the 30s. It got into the 90s back in 2008. When you have the VIX that gets that much higher, you can peel off 50, 60 S&P points in a session very easily in a couple hours. So it's very possible we can hit those levels. As you see here, this is another key chart. The TLT, the 20-year Treasury bond. As you see here, just keeps making higher lows, higher highs. As you see here, we almost pushed through. Actually, we did make a new high on Friday, 112.58. And this is the time to pull up a 2 or 3 year chart and take a look. And you see this TLT is above 2008 panic levels. So you have a TLT that is at 112.58. And in 2008, with the crisis, it hit a high of 111.05. So man, there's some people out there betting that there's going to be some major deflation here. And this bond market is a huge market. So you typically don't want to argue with what this market is saying. And as you see here, this histogram came down. Well, I mean, this MACD came down, but it looks like it wants to curl back up. If this curls back up, this could easily go to like 130, 140 a share. And with that kind of action, you could very easily be at in the SPY, talking about the SPY, whether it's going to hold the 2008 lows. As you see here, looking at the SPY chart, you had the MACD. If you look at this long-term chart, you see the MACD has rallied a lot. But if that momentum is killed and this turns, if this crosses over before you get to the zero line, as you see here, you create a positive divergence. But it went from 90 to 63. Actually, it went even. You had the MACD go positive back here in 2008, yeah, but you still eventually had it go from 89 to 63. So you had another 25% drop, yeah, and it set up the positive divergence that eventually led to a rally. But as you see here, when you have crossovers that happen before, crossovers that happen either above the zero or below, those are the most powerful crossovers you can have.